Good afternoon, everyone. This is Henry with simplertrading.com, and in tonight's free video I wanted to show you a couple of basic concepts that I think could be helpful in the weeks ahead and how I will be trying to find a low in the equities market. So if we start by looking at this through the basic idea that from the move from 479 down into the lows that were made at 420.76, if this is the bearish move that is in charge and you're going to continue to fail from it, well then you should fail on the bounce into the 618, right? 50% would be working back half of the decline. The 618 is just that much deeper into the retracement, but it tends to be a very pivotal area for trend moves to continue. So this is a bearish trending move lower. It fails at its 618 retracement. That would suggest that we move down into fresh lows, provided we don't hold the same type of level in the opposing direction. Notice how here, from swing low to swing high, this is a worthy way of studying charts, because look at the bounce that it provided for you on Valentine's Day, right? This is to say low to high, retracing in a similar manner, bounces from the 618. Then what do we see today as Friday closes? You close below that level, and I believe continue to emphasize movement down here into 410 and potentially even further into the psychological value of 400. So that's a very real path that is setting up here in the spiders. It doesn't guarantee that it will unfold over the weekend, right? You've got a lot of heightened anxiety through Russia and everything else that's going on with that. Say we open up on Tuesday after the 3-day weekend and you've got some relief. Well, as long as you are below this really important little double top, just be mindful that there is a path down here lower. So those are a couple of key things to reflect on in those price relationships and patterns that we should see unfolding. The other sentiment reading that's going to be most helpful and engaging to say, okay, we've made the extensions, we've got a reason to now really be coming in and considering buying, and this is through the put-call ratio. So what you saw here is that last big flush in January was met with the, basically once participants are really leaning into the idea of being bearish, that's usually when the market is ready for a more meaningful bounce. So you had a little bit of that elevated reading as far as today's close is concerned, but what really needs to happen here is taking out those old highs. Get the put-call ratio up into 1.2, 1.3, then you're really going to see fear grip the markets, and then once that sentiment is in place, then you'll get the chance to buy, sell some premium, something of that nature. But until that new low is made in the SPY, until the new high is made here in the put-call ratio, I think you approach the markets with a real chance of some bearish activity, and that's one way that I'll be looking to get involved next week. So I hope that's helpful. You guys have a great long weekend, and we will see you at the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.